Hi, it's Dave Roberson again. Welcome to Chapter 3 of our series on IPOs, bidding ready for them, the process, and what happens after. So I've got with me on this session Akhil Ahuja, who is with Barclays Bank, and he is here to talk about the process of an IPO. Akhil and I have known each other for more than 10 years, worked together at a number of companies, and I'm excited to have him talk on this stage of the process, or all the stages of the process, actually. So Akhil, I will turn it over to you.
Dave, thank you very much. It's, as always, great to see you. Appreciate the opportunity to do this. So thank you to RoseRyan and to OUM. And I'm excited to talk about the various phases of this exciting process of going public. So I think, Dave, you were going to put up the backdrop of a slide for me. Thank you very much. So let me break this down into various stages, as this slide demonstrates, but I'll talk you through each of the main components of this process. First is, let's talk about sort of 12 to 24 months out of contemplating, a public company. I call this phase, think like a public company. And what does that mean? That means start to think about the formation of your team. Do you have all of the key roles filled? Things like your CFO seat and various key members of the management team. Number two, test the equity story. Start to have those discussions with buy-side investors so they can start to get to know you. You can start to get to know them, and they can provide you very valuable feedback on what they like about the story, but even more important, what questions they will have for you as you mature the company and think about an IPO down the road. And that can help the next couple of years of how you continue to position, what milestones you're thinking about. So that's testing the equity story. The final piece in the couple years out time frame is IPO readiness. There are IPO readiness assessments that can be provided by your auditors, by third-party firms, by legal firms, but this really starts to test your controls, your team, your legal team, your finance team, your board composition, and it really gives you a nice roadmap to thinking about being a public company in a 12 to 24 month period. After that phase, I think of the next phase as you're now about a year out, and this is really the time to get ready. It's the time to refine the equity story. It's the time to understand your financial model and your financial readiness. So number one is continuing to test the positioning. So now you've hopefully engaged with buy-side investors. It's time to re-engage with them and now show them the progress since the last time you talked to them, and really how you're starting to tackle the milestones you may have laid out for the company. It's also time to engage with the research analyst community, the sell-side analysts, who will become an important part of the storytelling when you actually go through the IPO process itself. So time to engage with those sell-side research folks. Secondly, it's time to really refine the model, the financial forecast model. Start to think like a public company. How fast can you close the quarters? You may want to implement things like mock earnings calls to go through your script. Start thinking about those KPIs. What do you want to report on based on the quarters you just finished? How would you think about guidance? What are the forward metrics that you want to provide investors once you actually are a public company? And the more and more you refine that, the more you recognize, are they the right KPIs, and your comfort in disclosing them. Finally, it's time to think about some of the historical financial information, audits, those sorts of things. And clearly you'll be working very closely with your auditor partners as you go through that. But that's just about a year out. As you move forward from there, 6 months out is now it's really time to press the button and get going and bring on the full team that will be involved with your IPO. That's everybody from getting your counsel ready and the specializations within legal counsel that will need to be involved. It's bringing on third-party IPO advisors if you as the company choose to engage that specialty. And time to bring on your bankers and the syndicate. And that can oftentimes involve a couple of month RFP process and educating the bankers and presentations to the board before you make your final selection. Towards the tail end of this part of the process, you're going to begin your S1 drafting with your banking partners and legal partners, and think of that as sort of a month and a half to 2 months of really all of the S1 documentation, from telling the story to the MD&A to the risk factors. That's about a 2-month process you want to plan for. That leads you to what we call here the SEC review period. Think of that as about a 2 to 3 month process. From the time you confidentially file the S1, initially you have a 30-day review period with the SEC. You probably want to think about 2 to 3 rounds of comments from that time frame of where you're really engaging with the SEC till the time you're declared effective and ready to go. During that time, you're preparing your research analyst day, and doing a pretty formal deep dive for the research analyst community on the company, on the model, which gives them the basis to start to write their research reports and build their own research models, which is a key part of the IPO process. You're also beginning to engage with the buy-side investor community in a more formal way, a process called testing the waters, which you're doing when you're most likely confidentially on file. Once you're through this period and you are declared effective, then you've got roughly about a month to go. And over that month, after you're declared effective, you've got about a 15-day waiting period where you're getting ready to formally launch the IPO process. You are identifying who are your investor targets. You're working through some of the final details on what is the composition of your IPO look like, what is the size you're targeting look like, what is the valuation thresholds you want to go out to the market with. And after that 15-day period, you are now ready to hit the road and really tell the story. In this latest year, in a virtual world, roadshows have become quite condensed. We sort of anticipate a 6 to 7 day period for roadshows, which is down from 2 to 2.5 weeks, when we were getting on planes. But in this virtual world, it can be far more efficient. And we're having you engage with sort of 35 to 40 investors in a one-on-one format, and probably a couple of multiple day, multi-group group calls where you're presenting the story. At the end of that, it's time to look at the book you've built, understand who are the investors and the allocations you want to make, and what the price will look like. And you'll make those decisions in conjunction with your banking partners. And at that point, you're ready to list the company and be a public company. So I hope that's helpful. I know that's a pretty quick overview of this process, and there's far more detail that is involved in the process. But hopefully, this is a helpful high-level view on the key steps and timeline associated with this exciting process of taking a company public through an IPO. And with that, Dave, I will pause.
Akhil, thank you so much. That was great. That's probably the most efficient and effective explanation of the process I've ever heard. So super helpful, and that's just what our audience was looking for. So Akhil, thanks for your help. Thanks for those of you listening in on our third session here on the IPO process. And if you have any questions you'd like to raise with Akhil or me after this session, our contact information will be listed at the end. So again, thank you so much, Akhil. Great session, and appreciate your help.
Thank you, Dave. Appreciate it.